We had discussed forfeiture of shares in the previous video, and we took one question where the shares were issued at par and were forfeited. In this video, we will be taking one question where the shares were issued at premium and there is non-payment and the shares are forfeited. Now we had already discussed the meaning of forfeitures. Okay, forfeiture of share means the cancellation of share when there is non-payment of calls or allotment money by some shareholders. After giving proper notice, if they don't pay their installments, the shares allotted to them are cancelled and the amount paid by them is forfeited. We had discussed the journal entries. The share entries will be reversed. Okay, share capital which was credited will be debited at the time of forfeiture of shares. The amount paid up will be forfeited and credited to share forfeiture account, to share allotment, to share calls. Okay, this is the entry when shares were issued at par. Then second case, when the shares are issued at premium, share capital will be debited. Security premium reserve which is not received will be debited. If it is received, then we will ignore that. Okay, to share forfeiture, to share allotment, to share calls. Okay, these are the entries. Now let's take one question. A Limited issued 3 lakh equity shares of rupees 10 each at a premium of 2. That means 12 rupees is total amount receivable. On application it is 3 rupees. Okay, on application it is 3 rupees. On allotment 5 including premium. So 3 plus 2 it is. And the balance. Okay, balance on 2 calls. So out of 12, if 8 is received, 4 is the balance divided by 2. So 2 on first call, 2 rupees on second call. Okay, total application received is 4 lakh and it is a pro rata allotment. The excess application money is adjusted towards allotment. Mukesh, who was allotted 800 shares, failed to pay the calls and his shares were forfeited after the second call. We have to pass the journal entries. Remember the installment amounts: application 3 rupees, allotment 5 rupees including premium, then first call 2 rupees and second call also 2 rupees. Okay, and one shareholder holding allotment 800 shares did not pay the first call and the second call. So the first entry will be for the application money received at the rate of rupees 3 on 4 lakh applications. Okay, so bank account debit to equity share application 12 lakh rupees, 4 lakh into 3. Then it will be transferred to the capital account. So equity share application account debit to equity share capital. 3 lakh shares are issued. So 3 lakh into 3, 9 lakh rupees is transferred to the capital account. And the balance 3 lakh rupees will be transferred to allotment because it's a pro rata allotment. So the excess application money is transferred to allotment. Okay, now the allotment money will be made due. For that, the journal entry is equity share allotment on 3 lakh shares at the rate of rupees 5 including the premium is 15 lakh rupees. Out of that, 9 lakh rupees, that is 3 rupees per share, will be transferred to the capital account, to equity share capital, and the balance 2 rupees on each share, 2 into 3 lakh, 6 lakh rupees will be transferred to security premium reserve. Now see here in this question, the premium amount is received along with allotment and the arrears are in first call and second call. Bank account debit to equity share allotment, full amount is received 12 lakh rupees. Out of 15, 3 lakh was adjusted from the application money. Now the first call is made due. Equity share first call account debit 6 lakh to equity share capital 6 lakh rupees. Now 6 lakh rupees is made due, but at the time of payment, a shareholder holding 800 shares didn't pay his first call. So 600 into 2, 1600 rupees is not received. So from 6 lakh minus 1600, the amount received is 5,98,400 rupees. So Calls in arrear account is debited by 1600 to share first call account. In the same manner, second call is made at the rate of rupees 2. Share second and final call 6 lakh to equity share capital 6 lakh rupees. Again on 800 shares at the rate of rupees 2, 1600 is not received. So it will be debited to calls in arrear account to equity share second and final call 6 lakh rupees. Now there are two methods for recording arrears. One, we are not opening calls in arrear account. In the previous question we followed that method, and this is the second method where calls in arrear is opened and the amount of arrear is debited to that account. Now the forfeiture entry. Equity share capital 800 shares of rupees 10 each, so 8000 rupees. Now in this question the premium was received, so security premium will not be debited, will not be cancelled. Okay, to equity share forfeiture account, two calls in arrear, two calls of rupees 2 each, that is 4 rupees on 800 shares. So 4 into 800 is 3200 is not received, and the balance 6 rupees was received. Okay, so in the share forfeiture account we have debited 4800, 800 into 6. The security premium will be ignored.